Hello everyone. Today we are starting with the basics of accounting. So let's understand the business in a very simple way. So business is an economic activity. It's a monetary activity. It involves manufacturing where the raw material is getting converted into finished goods and trading where there is a distribution of goods and services with the object of earning profits. So there are two things. Either business is manufacturing, right? And then distribution of goods and services, or it is just trading, that is purchase and sales of goods and services with the object of profit. It is profit oriented. This is a very simple way we can talk about business. So let's understand what is the importance of accounting in every business. So accounting is the language of business, right? So whatever happens in the business, okay, all the activities that takes place, whatever the facts are there, they are generally expressed in the monetary units in terms of money. So whether you purchase, whether you sell, you incur expenses, there are gain, there are losses, you have assets, you have liabilities. So all kind of dealings, all kind of transactions, all kind of facts, all kind of activities, okay, of the business that we can express through the accounting and in monetary terms. Okay, so that is about the accounting. So let's understand a few more aspects of accounting, basic aspects of accounting. So let's take an example. There is a book store. Let's give it a name. It's a Ganesh book store. Okay, and so the primary activity of this, he's a trader. So Mr. A, okay, Mr. A is a trader and he's trading in the books. So what he does, so he purchased the books, okay, from the wholesaler, okay, and then sell it to the college students. So there are two activities here. He is not the manufacturer. He comes into the category of trader, okay. So when he purchase from the wholesaler, definitely either he purchase in cash or it is on the credit basis. So what do we understand by credit? That means he's not making full payment or not even a full payment of whatever raw material or whatever books he's purchasing from the wholesaler. So maybe the payment is made after he sells the books, or there is a time period from 1 month to 3 months when he makes the payment. So in that case, in that scenario, we call it the credit transaction or the credit purchase. So in that case, that wholesaler or purchase from who supplies the goods, who supplies the books, he becomes the creditor. Okay, so let's understand first. So Mr. A, who is running this Ganesh bookstore, selling the books, he purchased the book from the wholesaler. Wholesaler, he either, purchase in cash or on credit basis. So if you purchase on the credit basis, then that particular wholesaler becomes the creditor of Mr. A. Similarly, he sells the books to the students or to his customers, different type of customers. Again, that may be on the cash basis or it may be on the credit basis. Again, when he sells on the credit basis to one of the customers, say for example, let's say there is a student called Arun, okay, and the book costing around 20-30,000. So he's not making full payment. Maybe he's paying some 15,000 in cash, okay, and 15,000 or maybe say 5,000. Sorry, let's take 10,000. 10,000 he's not still paid. He's going to pay it after 1 month. So for 10,000, Arun becomes the debtor. Okay. Now, so there are other things in the business, like there are many other expenses. So are there? So let's talk about them. So what kind of expenses? So first is whatever is the cost of the books. Okay. Cost of purchase. Okay. Then to bring that book till the store, there might be the expenses of delivery van, or other expenses are there, so that we are going to add. Then wherever, whatever place he might have rented to sell the books, to conduct the sale, so he might be paying the rent there. Okay, telephone bills, electricity bills, so these kind of expenses that are going to incur. Okay, so when we talk about the profit element, so we have to see what is the difference between the revenue and the cost. So revenue is the income. Okay. So whenever, whatever books he is selling, so this is the revenue part. And whatever expenses he incurs, that is the cost part. And the difference between the revenue and the cost is the profit. Okay. So what element we have learned today? I think what is business, what is manufacturing, trading, what is accounting, then who is the creditor, who is the debtor, and what is profit. That's all for today. Okay. Do subscribe for more videos. This is the series that we have started for the basic accounting for everybody. So do subscribe and listen to it. Do give your feedback. Thank you.